Hi guys, good morning and welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. The cues are extremely strong this morning as well, with the GIFT Nifty hinting at a triple-digit up move. Asian markets in fine fettle. Wall Street saw a very strong rally overnight, although futures are trading flat, but S&P 500 is within reach when it comes to its record high. Nasdaq 100 in fact clocked in a record closing high as well. The very fragile ceasefire between Iran and Israel continues, although there were some hiccups. President Trump calling out Israel and Iran both for violating ceasefire, but for now both the sides have decided to stick to the ceasefire until the other provokes. So yes, that's the cue when it comes to global markets. For our markets, we saw a very healthy up move yesterday, but we fizzled out. The momentum kind of fizzled out towards the end of the session. We ended below that 25,100 mark as well, 25,317. That is the swing high that we clocked in yesterday, but really didn't sustain above those levels. Today, even if we have a good start, the big question is, will 25,200 barrier break on a decisive note? That's something that we'll be watching out for. HDB Financial IPO, the largest NBFC IPO in recent times, opens for subscription today, and lots of other stocks also in focus. Keep your queries coming in on our live feed. We will try and get them addressed as well. So lots to watch out for over the next 45 minutes as we move ahead. But before we start the show, really, let's take a look at the top headlines at this hour. Wall Street extends gains as the Israel-Iran ceasefire comes into effect. The Dow surges 500 points while the Nasdaq surges more than 280 points. S&P 500 inches closer to record highs as well. Asian markets open higher, mirroring Wall Street's moves. The GIFT Nifty is indicating a higher start for the Indian market. In fact, even in pre-open, we can see a good 140-point up move on the index. Crude oil prices fall for a second straight day, with Brent trading around that $67 a barrel mark. Futures are in the green right now, but last night we saw a 6% drop on crude prices. This comes as supply disruption worries subside owing to the Israel-Iran ceasefire. The fragile ceasefire between Israel and Iran appears to hold after initially faltering. The ceasefire announcement comes right after Iran carried out retaliatory missile strikes at the US airbase in Qatar. US President Trump lashed out at both the nations in a bid to save the frail ceasefire.
What will actually happen?
And US Fed
rates is going to
Chairperson
depend
Jerome
on-
Powell says he is in no hurry to cut interest rates, as they need to wait and watch the impact of tariffs at their ultimate level. US Treasury yields fall even as he says majority of the committee feels it will be appropriate to reduce rates later this year. All right, those were the headlines, but recapping yesterday's market action, we did end with gains, but off highs. The momentum kind of fizzled out. The Sensex fell, 900 points from the day's high. The Nifty Bank Index also came off 400 points from the day's high. Intraday, we hit 25,300, as I mentioned, 25,317. That was the swing high, and we hit that level for the first time in 2025. But divergent news flow around Israel-Iran ceasefire kept gains in check. The market breadth, however, was in favor of advances. In terms of the futures and options cues, if you look at the Nifty put-call ratio, that fell further to 0.85 vis-a-vis 1.04 in the previous session. No new additions to the F&O ban list, but Titagar Rail will remain in the F&O ban today. Two stocks that we will also watch out for in trade would be Biocon and RBL Bank, as both the stocks have come out of the futures and options ban list. Looking at the fund flows, FIIs were net sellers yesterday to the tune of 5,200 crore rupees in the cash market. On the other hand, you had the domestic investors, they were net buyers to the tune of 5,200 crore rupees in the cash market. To understand the setup today, of course, it's positive, but whether or not we have the legs to move past 25,200 and stay there, that's the key question. And let's bring on board Sudeep Shah, Head Technical and Derivative Research at SBI Securities, to get him to answer this question. Sudeep, great to have you on the show. We did manage to break out of that range, 24,800 to 25,200 yesterday, but we didn't really, stick to that 25,200 and above level. Would you say that today as well, even if we see a good start, 25,200 may not be able to sustain, or would you say that, perhaps today is the day where we, kind of break out of that range decisively?
Good morning, Nandita, and good morning to all the viewers. Nandita rightly put that it might still today might not yet be the day that we may cross 25,200 on the upside. However, there would definitely would be a strong effort from the bulls to defend this 24,850, 24,950 mark. And if you see yesterday, a lot of aggressive put writing has happened in 24,900 as well as 25,000 puts. So that means that at least the downside, the support zone could get secured. Whether or not we cross 25,200 is a question, and that may not be, I guess, a long lasting question, because it's just 2 days, today and tomorrow, before the expiry, the monthly expiry is culminated. And my sense is that we might not cross 25,200 as of now for tomorrow's expiry, but immediately post expiry in the next series, in the July series beginning, we might definitely cross this 25,200 mark once the market is a bit lighter post the expiry. If you see the setup, if you see the overall setup in the last 20-25 sessions, there was definitely markets were trading in this range between 24,500 and 25,000 on the upside. Every time we were attempting to cross this 25,000, there was severe selling pressure from higher levels. But this time, yesterday, because of the news flow, markets sustained, markets crossed 25,000, it moved to 25,300, and then we saw some selling pressure from higher levels. But despite that, the closing is about 25,000. And yesterday, the reason for selling pressure from higher levels was still there was some uncertainty from the Iran-Israel front, whether or not the ceasefire is a permanent one or it has been broken. But yes, now last 12 hours to 16 hours, there has been no say no violation of the ceasefire norms or anything. So it might go in the favor of bulls. So overall, we feel 24,900, 24,850 will act as an important support until this holds. Gradually in the next few sessions, if not today, markets are heading towards 25,500.
Okay, that's the view. 24,900, 24,850 would be a floor, and if we sustain above 24,200, 25,200, 25,500 cannot be ruled out. Of course, July series starts on Friday, so perhaps if not in the next couple of days, maybe in the new series. Let's talk about the Nifty Bank Index as well, Sudeep. 57,000. We've been wanting to cross that level on the upside. Hasn't really happened in recent times. Would you say that the bank Nifty could go ahead and outperform? And secondly, HDFC Bank will be in focus as its NBFC arms IPO kicks off today. So how would you trade into an HDFC Bank today?
Nandita, Bank Nifty has been one of the strongest sectors in the last few months, if not days. And even with banking, it has been, banking, financials, all the market intermediary stocks, NBFCs. So it's not just say related to a few banks. It has been the rally has been well spread out, and that's why we feel that overall the entire banking as well as the financial space looks really good from the current levels. If you see yesterday's closing also, it has been above the highs of most of the sessions right from 23rd April 2025. And that is the reason we feel that post that breakout, it was just that first instance where there was some profit booking from higher levels. But in the next few days, once the consolidation ends, even this post this breakout, the indices would head towards 57,500, 58,000 in the coming few sessions. The support for the same would be closer to 55,900. Now, coming to HDFC Bank, similar structure with Bank Nifty, exactly identical structure. And here also we feel that 1900, 1920 will now act as a floor, a good important support zone is being built here. Last 1.5 to 2 months, 1900 mark has not been able to breach. Strong put writing happening closer to 1900, 1920. So that means that a decent support zone has been developed, and till this holds, there could be a rally up to 2100, 2150 also. And that is what that is why we feel that Bank Nifty could rally much stronger and much harder from here.
Okay, Bank Nifty can rally much more stronger from here, but we just have about 2 minutes to go for the markets to open. Want to get in your recommendations for the day first before we move on to specific stocks.
A couple of stocks are looking good. One is if you see CAMS in the last few sessions, there was an attempt of a breakout. Yesterday also there was some profit booking from higher levels, but yes, despite that, the weekly setup looks really strong. So we feel that from the current level, CAMS could be bought with a stop loss of 41.30 on the downside and a target of 4,400 on the upside. The second stock that looks good is Kotak Bank. A strong breakout in Kotak Bank has been visible post 7th of May. It was into a consolidation. And yesterday we have seen, apart from the breakout, there was a follow-up move also. So from the current chart structure as well as the looking at the weekly as well as the monthly from a medium to long-term perspective, we feel that this stock could go up to 2,400 on the upside in about a month or two, and the stop loss for the same would be 2,150.
Okay, that's the view. CAMS and Kotak Bank, those were the recommendations coming in from Sudeep. But Sudeep, just about seconds to go for the markets to open. 30 seconds, so to say. Nifty, has settled around 25,150, 100-point uptick. Of course, we are going to open around that level, but 25,200, I think that will be the key level to really watch out for. Also, some stocks that will be in focus would be the likes of Hindalco, IRCTC as well, given the fact that sources suggest that train fares are set to rise from the 1st of July. That official order is expected in this week itself. So keep an eye out for railway stocks as well. But yes, first ticks coming in now. 100-point up move on the Nifty, 25,150. We are around that level. Sensex up 400 points almost. The mid cap index is also up 0.3% at the start. The Nifty Bank Index has had a very quiet start. 56,530 is where we are at, just about 60-70 odd points higher for the Nifty Bank Index. Advanced decline ratio 6:1 as of now, but once it settles, we'll see how the breadth really pans out. Yesterday, the breadth was skewed in favor of gainers. So 1386 advances to 237 declines on the NSE. Let's take a look at some of the other sectors then. Yesterday, important point to note that IT pack, gave up, in fact, most of its gains. Ended marginally in the green, but earlier on in the day, that index was up 1.5%. Today, I can see a sea of green on the screen. So all the sectors have started the day on a positive note. IT is up over 0.5%. I think this is the sector that's taking the lead as of now. Talk about consumer durables. That index is also up 0.7%. Oil and gas index is up 0.8%. You have metals also up 0.5%. Autos are up 0.5%. FMCG is up. So across the board, buying coming in as of now. We'll have to see whether all these sectors hold on to their gains or not. In terms of individual movers then, let's take a look at the stocks that are taking the lead at the current juncture. As we speak, the Bank Nifty has slipped marginally into the red. The top gainer on the index then, it's Titan, led by Trent, followed by Trent, Ultratech Cement, and some of these IT names which saw some profit taking yesterday. Wipro, HCL Tech, they are also among the gainers. Cipla, Nestle India, Reliance Industries as a brokerage note on this stock. The stock is up almost 1%, providing support to the index. Power Grid, Adani Enterprises, Tata Consumer, Grasim, these are some of the other movers. So a lot of consumption IT names dominating the list. And of course, even Reliance Industries. The gainers, the losers, I beg your pardon, are few and far between. But they are largely from the private banking names. ICICI Bank, Kotak Mahindra, Axis Bank. These are the top Nifty laggards. SBI Life is the other one. Bharat Electronics, some bit of profit taking here as well. HDFC Bank, minor gains, 0.3% or kind of a gain. But I want to talk about Hindalco first. The stock is in news today. Sudeep, how are you looking at this stock? Because Of course, it's made a acquisition set to acquire Aluchem companies. It's an Ohio-based manufacturer of specialty alumina for an enterprise value of $125 million. This is its third acquisition in the US. This acquisition will be carried out through its step-down wholly owned subsidiary, Aditya Holdings. The stock of Hindalco has seen a 20% recovery almost from April 7 lows. Last week or so, it has given positive returns. How would you trade into this stock from the metal pack? Would you go for a Hindalco or would you look at something else, steel makers or anything from the metal pack? Which pocket is looking good to you on the charts now?
A lot of these metal names, Hindalco has been doing well. And I feel within this aluminium space, Hindalco should lead because Nalco is still a bit, say, underperforming if we compare both the stocks together. So, from a metal standpoint, there are two stocks, aluminium and non-ferrous ones, which is within all these, say Tata Steel, Jindal Steel, JSW Steel, we feel JSW Steel should do much better looking at the overall structure. And from the aluminium names, we feel Hindalco should be doing really well from here on, and 640, 650 zone will now act as an important support. And till the time this zone holds, there could be a up move up to 700, 730 levels, which were the previous all-time highs.
Okay, that's the view on the metals. Hindalco looking better compared to Nalco on the charts. We'll talk about an IndiaMart as well. There's an upgrade coming in on the stock from Nuvama. They've upgraded the stock to buy. Target price has been raised to 3,800 rupees per share. The stock is up 5% as we speak. I think it's one of the top gainers on the Nifty 500 index at levels of 2,620 or so. Do you think it's a good idea to take a trade on this particular stock, or would you look at it from a positional point of view?
Nandita, I feel from a positional point of view, the stock is well placed now. There has been a decent bottom building activity that has already happened here. Right from I guess there was a time in 2022-23 when the stock had plummeted from 4,600 to almost 1,800, 1,900, and then there was a rally till 3,400 in September 2023. So in that time also there was one bottom which was formed closer to 1,800 in July 2022. Once again, there is another bottom which has been formed around the same area in February, March 2023-25. So we feel that on long-term charts, there is a double bottom formation that is quite visible. But yes, from the current levels, one should add in parts because it is still not a double bottom breakout and the process of the bottom formation is still going on. So overall, we feel that these are very good valuations to enter, but add it in phases and steadily. Overall, the stop loss, the support could be 2,400, and the levels that we feel on the first levels that can be achieved would be 2,950 to 3,100 on the upside in the next couple of months.
Okay, good. The time to accumulate in a staggered fashion. That's the call on an IndiaMart. But let's before we bring take up queries, want to get your thoughts on an IRCTC. As I mentioned, train fares are set to rise from the 1st of July, source based, of course, right now. This fare change discussion is in final stages. Railway Board has proposed fare hike across all classes. Non-AC mail express fares are likely to go up by 1 paisa per kilometers. AC train fares are likely to rise by 2 paise per kilometers. Now, official order is expected this week. But IRCTC, if you look at some of these railway stocks, they had, of course, lost steam. But in the last, 5-6 sessions, at least IRCTC is attempting at a recovery, so to say, looking to pick up some bit of momentum. What are the signs you're getting from the charts? Do you think whatever little recovery it's targeting, could that fructify?
Nandita, I don't feel looking at the charts of IRCTC, it's in a major downtrend now. And till the time the stock does not cross and sustain above 800, 820, no major upside up to say 1000 or 1100 could be on the cards. It might move 3-5% from the current levels, but the larger structure is on the downside. So just going basis this particular news, I don't feel that should be taking a punt here and just trying to play the news and try to benefit from the momentum here.
Okay, stuck in a downtrend, IRCTC, maybe some time away from any meaningful recovery, so to say. But let's shift focus to our queries then. A lot of queries on defense, shipbuilding, given the fact that they are once again back in favor. Starting with Priya Prathab, she's bought BEL, Bharat Electronics, for 385, and she wants to know whether she should hold or sell. BEL 419, she's making some bit of a profit here, but would you advise her to hold on? Do you see more upside, or is there a case for at least booking partial profits?
Nandita, I feel one should definitely book partial profits in a lot of these defense names which have moved too fast and too soon, and the rally has been steep in a lot of cases. Now, see, till now, all these stocks were moving right after the India-Pakistan conflict, and then the Iran-Israel conflict. So now with the war rhetorics now just calming down, just cooling down, I feel from a long-term standpoint, this sector will stand to gain. It's an influx state. So I feel there could be a case from an extreme long-term scenario from an investment perspective, but in a short-term time span, the momentum could now turn sideways, and a lot of these stocks which have moved, say 100%, 70% to say 100%, 200%, may see some kind of a profit booking or cool off from higher levels. So it may be a minor profit booking move, but yes, definitely it pays to book profits, at least partial profits, and then trail the balance positions for from a long-term standpoint.
Okay, that's the view. Partial profit booking could be an ideal thing to do. We had a query on defense from Varsha as well. Varsha, you can take a cue from what Sudeep just said. But let's shift focus and take a query on OMCs. Pankaj Kajalia wants your thoughts on IOC and HPCL. Of course, we've seen extreme volatility when it comes to crude prices, and of course, stocks have also been reacting to it. But given the fact that the ceasefire is in effect and crude prices have cooled off quite significantly after hitting $80, do you think it's a good time to jump into some of these OMCs? Because in the last 1 month, we did see negative returns. But here on, if crude is expected to remain at these levels or perhaps cool off a bit more, would it be a good time to play into some of these OMCs, especially the likes of HPCL and IOC?
Definitely. If you see all these oil marketing companies, despite the war and despite the crude moving higher in the last 1 week, the Brent crude never crossed $82 a barrel, which was a resistance. So while there's a lot of silence, a lot of ceasefire talks and everything which has fructified, and because of which crude oil prices have now come back say closer to 70 or below that. So now I feel that yes, from the current price as well as on dips, these stocks should be accumulated from a long-term standpoint. IOC around say 140, 145 makes a good case for investment also. Rather than trading, I feel these stocks are very good from an investment standpoint, as they not only give you the benefits of price appreciation, but these are all dividend-paying companies. So my sense is that from our not looking at it from a trading perspective, one should look at it from an investment standpoint and keep adding these stocks from a long-term perspective.
Okay, that's the view. Keep adding with a long-term perspective, not really for trading bets when it comes to OMCs. Shifting focus to L&T Finance, the stock has hit a fresh 52-week high of 204 rupees or thereabouts. There's a query coming in from RG on this particular stock, wants to know the next target. The stock has done extremely well. If you look at the last month or so, 15-16% kind of returns. 6 months, the stock has given almost 50% returns. Do you see higher targets?
Absolutely, Nandita. The stock has given a breakout here, and it is trading above all its say short and medium term resistances. The right from 2007 till now, it has given a 7 8 years breakout. So generally, when it's such a the breakout is on such a larger time frame, the targets are even bigger. So looking at this chart structure, I feel the stock is headed much higher up to 240 250 levels in the coming few months, or at least 4 5 months time frame. But on the downside, now 185 190 will form a strong base, a strong support. Any dips towards this 185 189 mark should be used to go long, and keep a stop loss of 180 for the all the entire position that you hold. And I feel it's on a breakout. The stock could do well towards 240 260 levels in the coming few months.
Okay, 240, 260 levels. Watch out for that on the charts in the coming few months. Moving on to the next one then, Praveena has written in. She wants to know your thoughts on Adani Ports and the target as well on this particular stock. The stock has been fairly sideways, has seen a down move over the last month or so. Hasn't really been a very smooth ride, so to say. So here at sub 1400 levels right now, the next target, immediate target to watch out for here.
Nandita, Adani Ports, I feel till the time stock does not cross above 1410, 1420 levels, there could be some capping of upside here. So overall, the medium term chart structure looks good, but extremely short term period, I feel 1410, 1420 should act as a resistance, and only above 1420 the stock could head higher up to 1500. So wait for a break of 1420 and then go long here with 1380 stop loss.
Okay, those are the levels to watch out for. Hope that answers your query, Praveena. Last query then for the day. Bharat Shahane has a query on Deccan gold mines for a 12-month period. Just wanting to pull up the charts of a Deccan gold mine. Any thoughts, from a 1 year perspective? Would you be looking at this particular counter, or is it an avoid?
No, I would look at it from a 1 year perspective. I feel yes, from the current levels, the stock looks good and can be added in parts. And yes, look at it from a 25 to 30% CAGR story on upside, and this could be accumulated but in parts.
Okay, it can be accumulated but in parts. Bharat, hope that answers your query. But we've come to the end of the query segment. On that note, all those whose queries couldn't be taken up today, please send them in again tomorrow. We will get them addressed by our expert. But with that, Sudeep would like to thank you for taking out time and joining in this morning. Always a pleasure, and I look forward to our next conversation as well. Have a great day.
Lovely, Nandita. Thank you.
Thanks a lot. On that note, before we bring on board our next guest, let's see what the market is doing. Well, we are looking at a triple digit up move, but 25,200 still eludes the market right now, the Nifty right now, 25,170. We are still sub that 25,200 level. Mid cap index is also moving in tandem with benchmarks today, 0.5% gain on the Nifty mid cap index. Bank Nifty holding on to the positive zone as of now, but mild gains, so to say. The advanced decline ratio is fairly strong, 8:1, that's the NSE advanced decline ratio. So breadth is extremely strong at the current juncture, and we are seeing across the board buying when it comes to the sectoral movers. But let me bring on board Daljit Singh Kohli, head equity at Roha Asset Managers. Daljit, lovely to be chatting with you this morning. Lots have happened, on the geopolitical front. There's a fragile ceasefire at play. Global markets seem to be reacting quite strongly to that. We've also seen a good rebound. But do you think the worst, at least on the geopolitical front, is out of the way for now? And here on, the focus will shift to the trade deal with US and earnings that's just knocking at the door now.
Good morning. Thanks for having me on your show. To say that geopolitics is out of the way or we are done for the time, I think that will be difficult to say because we don't know. These days geopolitics is a matter of one tweet. Somebody is so tweet hungry that If he just puts in one thing, and we have a spiral of things coming in. So, and we don't expect that this is going to end very soon. So, this geopolitics will probably continue. But I think markets have realized the importance of these things, and markets have realized how do these things actually impact the corporate earnings or the economy as a whole. So there are always this knee-jerk reaction, some trading momentum here and there. Some people obviously because they are momentum traders, so they would want to take the advantage of this kind of news flow. But for investors, I think most of them have understood that these things are only for temporary hiccups, and we don't have to worry too much about it. Markets have seen this in the last 3 months, actually, at least from or 4 or 5 months, actually from January onwards. We've seen how the stocks have gyrated from top to bottom and then recovered all the way up to their previous highs. So I think this kind of volatility is expected. Probably this will remain the same for a few months more, but the fundamentals will remain intact. And the good part is that India's macroeconomy as well as micro, both are in favor of equity markets. So we have actually written a note a few days back to all our clients that we are actually very positive on the markets for next few months. We are looking for markets gaining substantial highs in the next few months, purely because of the confluence of many of the fundamental factors. So some of them, like most of us all know, that this impetus from RBI on the liquidity, on the rate cut cycle has begun. The transition of this rate cuts will start benefiting the consumption cycle. We have already seen some sample of that in the credit card spend numbers. Just I think yesterday or day before, the numbers have come in, and you can see that there is a good improvement recovery in that credit card spends. So that's first sign. MFI guys have started talking about things worst behind now, maybe 1 or 2 more quarters, and then things will be in shape. So all these things are telling you that probably the benefits of the policy action is now going to show up in next 3 4 months. Second benefit would be the base effect. Last year we had H1, which was washout. Q1 was washout because of the elections. Q2 was because of erratic monsoons. Both these things are opposite this time. So there is no election, there is no hiccup from there, and monsoons are until now they have spread out well, barring few places here and there, but monsoons are fairly okay. So which means that the consumption boom can take shape well, which will show up again in next 2 quarters. So we are expecting that corporate earnings for Q1 and Q2 should be better than many people are estimating, and there could be a reason for a surprise, positive surprise there. So and then that's that confluence of RBI plus corporate earnings. And the third factor is this, because of all this, what turmoil geopolitics has done, actually there is a thinking amongst most of the long-term, long-only funds, etc., that now they have to shift some assets from dollar. So dollar-denominated assets might see a little bit relatively less importance versus other currencies, and that would mean that inflows into the country. So we have already seen some of them happening. Of course, they are not in that bulk quantity, but they are coming. And the fourth factor, which is again a very important and long-term change, is about the partial movement of supply chains to India. People have now understood this has been going on. China plus one India has been going on for last 4 or 5 years. But when we talk to the managements, when we speak to the companies, they always say people are only doing inquiries. It is all a paperwork. Now, in last 4 or 5 months, many companies have actually started moving ahead on their plans because they've understood now this is for the real. If from 100% of tariff to 25%, then again someday something will come. So now most of the MNCs, most of the clients in your Western world, they have started actually taking action on the ground. We have seen in electronics, we have seen in textiles, we have seen in pharma. So I think all these 4 or 5 things together are making the right recipe for the market for next few months at least.
Right. A couple of questions, Daljit. Since you spoke about supply chains, rare earth magnets, there has been a supply disruption on the back of the curbs that have been put in place by China. And of course, India is also taking steps to, become a little self-reliant, so to say, in rare earth magnets. How do you expect that to play out? Do you think it will be easy for India to, look at domestic manufacturing when it comes to rare earth? And in light of that, how do you look at the EV makers?
See, such kind of issues will keep erupting now. We have to be prepared. And industry is also, I think, ready. They know what happens when such kind of geopolitics happens. People are looking for a bargain point, no? No, what is that which I can squeeze the other party? No, so this time it is rare earth. A few years back it was semiconductors. Sometimes next time it will be something else. No, industry is, while it may sound very big thing, it may grab headlines, but in reality, people know how to handle these things. No? All these industries have been there. They are all matured industries. They have been in existence for the last many, many years. They know what are the alternate supply chains, how things are working. And of course, there are people who are working on alternate methods, alternate items to use instead of one item to another. So I think this kind of bargaining doesn't stay for a very long time. It does impact a bit of things here and there. Yes, there will be some supply chain disruptions here and there, but will that change the entire course? May not. It may have an impact on one particular sub-segment, one particular section of the industry, of any one industry. That can happen. But that will be very stock specific or industry specific. It won't be a very major thing for the country.
Got your point. And where are you in the investment versus consumption debate? Because there have been tailwinds for consumption with rate cut cycle kicking off. You have tax cut announcements coming in, in the budget. But traditional consumption stocks haven't really fired up, so to say. Of course, defense manufacturing has seen a comeback, especially after Operation Sindoor. So, do you see the scope for more leg up in consumption going forward because it hasn't really fired up yet? Or, are you in the camp that, we're just about once again getting started when it comes to defense manufacturing and the investment side of the cycle?
So on the defense manufacturing, yes, things are improving. Many companies are getting orders. There is a pipeline of orders and a lot of positive things happening from the government side. But for us as an investor in the stock market, we don't see too much of a scope there. We, as a disclosure, we don't have any defense stock in our portfolio purely because of the valuation, because most of these stocks have moved far ahead of their fundamentals. They are all good companies. They might get orders. They will be able to deliver them, but you have already paying for next 3-4 years of their earnings. So which we don't want to do. And therefore, we have chosen not to participate in that part purely because of the valuation concern. On the consumption side, I think after 3-4 years of lull, time is now coming. There were many factors, many reasons why these things were not picking up. But this is the time when there are some green shoots, as I said, from the credit card spends, etc. With this home loan rates coming up down, with the tax benefits, actual benefits of that will start showing in this month, next month onwards now. So all these things will start playing out. The inflation, which was a very major reason for consumption, especially the urban consumption not picking up because people didn't have so much of disposable income left after that kind of high inflation. That is now being taken care of very well. Inflation is very much under control. So all these things will now play out probably next 3-4 months, 6 months. And that is why we think that consumption cycle will play out. Now, of course, within consumption, I want to make it very clear, we are not playing on staples. That part, because there it's not the consumption has gone down. There the pattern of consumption or the behavior has changed. No, now instead of people just going with the top name, top brand, there are many D2C brands, there are many local, regional brands which are working. So people are eating those things, but they may not be buying from the well-known brand that we all are aware of. No, they might be choosing something else which is available, which is more probably healthier, which have more nourishment, something of that kind, depending upon each one's marketing strategy. So there, that kind of cannibalization within the sector segment is happening. It's not that the consumption has gone down; it is that the brands that we are aware of, they are seeing the pressure, but the new ones are picking up. So we are not playing that part. We are playing in consumption. We are playing with very high-end luxury items like car dealers. We are playing with the small appliances, the kind of companies which are into home improvement, so tiles and steel pipes and all that, then pipes, then lighting, these kind of companies which we are playing.
Okay, got your point. Last question really, IPO street is buzzing with activity. We have, HDB Financial IPO opening up today. Have you looked at the issue? Any thoughts? Because, are you surprised by the, issue price, given the fact that it was available at a much higher price in the unlisted market? And do you see the RBI's draft circular on overlapping business emerging as a key risk going forward for HDB? How are you looking at this issue? Would you be subscribing? What are your thoughts?
So first thing is, as a PMS, we cannot subscribe because it has to be done individually. So that makes very tedious job of applying so many number of clients in each one individual. We don't apply in IPOs because of the logistics reasons. Second thing is about the issue being priced at much lesser than the unlisted price. So actually this is a awakening call for many who invest in unlisted. They have to understand at that very big dilemma of private market versus the public market, how what are the pricing and what kind of anomalies exist. We have seen not the first time in this, we have seen in many other companies also earlier, no, when private guys had paid far much more. Then the issue got listed also at a very high price, and finally it came down much lower than that. So in many examples are there, and last 2-3 years we have seen that. So I think the unlisted price may not be the right benchmark to understand the company's actual valuation. We have to understand the company on its own merit and compare it with its peers available. So accordingly, the issue price would have been set up, I think. And ultimately, it will depend on how the company performs, how it works. So we have to give it some more time. On the NBFC space as a whole, we are positive. We have not, of course, disclosure on this stock. As I said, we are not going in for the IPO. NBFC space, we are definitely very positive. We are looking for a couple of names there to add. As of now, we are holding only housing finance companies, but we are looking to add some, at least 2-3 names in the NBFC space to play this rate cut cycle and the consumption boom, basically.
All right, got your point, Daljit. With that, I would like to thank you for taking out time and sharing your thoughts with us. Look forward for another conversation sometime soon. Hope you have a great day.
Thank you.
Thanks a lot. Well, on that note, we've come to the end of this edition of Opening Bell. Just want to point out, the much anticipated IPO. Biggest NBFC issue of the year, 12,500 crore IPO of HDB Financial has opened up, as we were just discussing with Daljit as well. It will remain open until Friday. The main board IPO is a combination of a fresh issue of 2,500 crores, offer for sale of 10,000 crores. And of course, if you look at the price band, it's at 700 to 740 rupees per share, and the lot size is of 20 shares. We will be touching base with the management in an hour from now, so you can catch their views and their forward outlook going post IPO outlook going forward. And of course, stay tuned for that on IPO Watch. But for now, the markets are in fine fettle. 150 point gain or up move on the Nifty around that 25,200 mark, but still will not be able to cross that barrier just yet. Bank Nifty also in the green, and the the advanced decline ratio is looking extremely healthy, 6:1. That's the NSE advanced decline ratio at the current juncture. With that, timed out. Thank you for tuning in. Of course, see you in an hour with the management of HDB Financial. Don't forget to tune in and have a great day, and of course stay tuned to Money Control for all your other news and updates. Thank you.